the main stage where we will be looking at the road ahead, new realities, new challenges, new opportunities. So I am very fortunate to have with me now Razia Khan, Chief Economist for Africa and the Middle East at the Standard Chartered Bank. We have Jacqueline Mugo, the Chief Executive of the Kenya Federation of Employers and also the Secretary General of Business Africa, the confederation of like-minded associations across the continent. And we have Natznet Tesfay, Executive Director Africa at IHS Markit. So a warm welcome to all of you, and so grateful that you can take part in this last plenary session at this year's Nordic African Business webcast. So I would like to just kick off and ask you, Razia, what are the new economic realities the continent is facing now?
Well, one of the things that we're still trying to do is to understand better what the recent crisis will mean for African economies. It's easy enough saying this was the year in 2020 when we had the lockdowns, we had curfews, therefore, in almost all places, we're going to be seeing a bounce back in growth. That's just a technical factor. The base is really weak. There will be better momentum. The real question is, can we see that sustained experience of growth in sub-Saharan Africa beyond this? We know about the damage, the economic damage that COVID has wrought. So whilst the health crisis, thankfully, has been a lot less severe than initially feared, the big concern is the economic fallout, the impact on revenue for governments, a higher level of indebtedness, their ability to continue to spend to try to get us out of this crisis is really going to be called into question. And also what the COVID crisis has meant for a lot of the region's small businesses. Can we assume necessarily straight line progress, that as soon as things open up, it's back to business as usual, the momentum is restored? Everything that we know about the trajectory of the COVID crisis so far tells us this isn't likely to be the case necessarily. We are going to be in a different world. COVID will be with us for some time. Its impact on tourism, on the services sector more broadly, is going to be there for some time. But in this case, it's important not to lose sight of those longer-term drivers of African growth. The younger demographic, the fact that sooner or later we're going to see a resurgence of that rural to urban migration, the adoption of new technology, perhaps accelerated by the COVID crisis, all of these building blocks are very much still in place.
Great, Razia. I want to take that further now with you, Jacqueline. And how are your members in the Kenya Federation of Enterprises and Business Africa, for that matter, coping with the current situation, and what makes you hopeful about the near future?
I think the state of business in Africa and in Kenya is dire. As Razia is saying, we are all still trying to understand how long will this go on, but we know for a fact that business has taken a beating, although from a health perspective, Africa has not been as adversely affected as the rest of the world. But if you look at the structure of the economy in the continent, which is largely informal and small and medium enterprises and rural and agricultural, then we know that the economic impact will be felt for a very long time. We actually don't know how long that will be, but for sure 2020 and most of 2021 for us is a time of difficulty and great recoveries. How does business then recover? From a survey that we conducted, mainly looking at small and medium enterprises in least developed countries, the results came out last month. The greatest need is financial support. The bulk of SMEs in this region have had to lay off staff because the sectors that are largely job-rich, as we call them, were the most affected. Tourism was mentioned, the textile, the arts and crafts, the personal care, hospitality, energy, and agriculture. There was no business going on. Africa is not as technological as the rest of the world. We are hands-on people, doing largely unskilled everyday work. So that has meant that most people are out of work, and families that depended on the few people that have work have then been thrown into a dire situation. We also have a very high youth population, which was already struggling for employment. Most of these are now struggling even harder because the little businesses that they were able to do have taken a beating and are just beginning to recover. But as we look at the resilience of the continent and the fact that it's not been as adversely affected as the rest of the world, when you look at the potential of the level of skills that the youth have and the focus on the technical and vocational training, I think the future gives us opportunity to change the way that we do business in the continent, together as a continent, doing more as Africa, instead of relying on the rest of the world. Because when we were closed in as countries, we realized there was a lot of potential in the country. And my hope is based on the fact that we've seen new businesses spring up. People making masks, people making clothes, people transporting food using borders, which are small motorcycles, to move goods and services across various sectors and various places in the country. So the spirit, the resilience, and the entrepreneurship acumen that Africa has, and the natural resources, I think is the hope that we can build on as the rest of the world to look at Africa as the continent of the future.
Well said, Jacqueline. Thank you. Going over to Natznet, you have been following the foreign direct investment trends to the continent. And what is the next financing paradigm, if you can speak about that, for Africa? And how will it be different going forward?
Thank you, Eivind, and thank you for having me. One thing that was very marked about COVID in the onset of the pandemic and the economic shutdowns as a result of it was the scale and speed of capital outflows from emerging markets was quite sudden and sharp, especially compared to previous triggers for disruption. And if we look at FDI forecasts, it's unlikely to rebound. The contraction is likely to continue into next year. And that raises questions as to how is Africa going to finance critical development in order to stimulate and spur the necessary recovery. We see that a number of governments at this moment are carrying into the pandemic a very heavy debt burden. There's been some progress with multilaterals led by the IMF and the DSSI initiative. In fact, they're going to be discussing whether or not to extend it even further into 2021 to provide additional respite for these governments in order to at least finance the most critical areas like healthcare provision and other social services and protection mechanisms, as Jacqueline has said, to support those who are most affected, like SMEs and the less formal sectors. But still, nonetheless, it's going to be the debt as it stands, because it's not just held by private official creditors, but also private creditors and some bilateral creditors that are not observant to the Paris Club rules. It means that it's still going to be somewhat of an anchor, slowing the momentum of potential growth in the medium-term outlook. So it raises questions as to how are multilaterals engage with Africa to support them through this tricky period. Also, we've seen that certain partners, such as President Macron when President Kenyatta was visiting last week, discussing how can we reshape the OECD investment paradigm and guidelines so that it could be more competitive and responsive. And there was an inference there to address the cost of capital, because that's another debate that has come up within Africa, that Africa pays a higher premium. And I know that panelists in earlier sessions have mentioned this, but nonetheless, a higher premium compared to other emerging markets because of a higher risk perception. So these are questions that are really useful as they come up in these discussions. So it's not just focused on the immediate outlook of debt relief, but going forward, how can Africa access this financing and so that it's more sustainable lending and not leading to unsustainable debt levels, which is a tricky position that we're in right now. But what has been encouraging is how quickly these stakeholders have rallied to support the countries. But the multitude of difficulties and complexity make it quite difficult to address it head on. So it's up for further discussion. I'm sure Razia has further points to make on this.
Razia, would you want to add anything on that? Or
Yes, certainly. So, a big question right now, given the revenue shock that we've seen across the board, and we've got to think of this in perspective. A lot of African economies have been underperforming for some time. These are economies that had barely recovered from the commodity price shock of late 2014. Growth had been subpar, especially in a lot of the oil economies, and suddenly there's a new shock which they're totally unprepared for. Also, the nature of this shock. If you think of an economy like Kenya, I can't think personally of a previous shock that would have impacted tourism, that would have impacted for some time horticulture exports. Yes, they're recovering now, remittances at the same time. It's just the multi-layered impact of this shock and what it does to domestic demand. So the big concern everyone has is, how much indebtedness does this leave the region? And are we looking fundamentally at a different growth profile going forward? Because now, once again, only so many years after the HIPC and multilateral debt relief initiatives, we're talking about a region that has to contend with much higher debt ratios. What is going to be super important in all of this is the ability to reignite growth. We would worry a lot less about the accumulation of debt so far if we were seeing the growth and the revenue momentum where suddenly that didn't become the most important factor. So that is a key question. But there's also something to be said for the ability of African economies to keep on attracting the financing that they will need for their development. And this is the key issue for many African economies. Yes, there has been a reaction for good reason in terms of the immediate onset of the crisis and the request for debt service standstills, the request for debt service relief. But what is needed ultimately is a longer term plan that is going to crowd in more capital into the region, especially private sector capital. Now, what could move in Africa's favor? The demand for higher risk premia aside, we know that we have seen an unprecedented amount of balance sheet expansion by developed world central banks. We know that that liquidity is going to be looking for somewhere to be deployed, and the higher yielding, higher returning opportunities are going to be looking that much more attractive. But what is untested at this point is whether risk appetite can recover to the sort of levels where we are going to see those capital inflows back into sub-Saharan African economies, where there is such a strong need to be able to finance development. A final point on this, and we can talk about this at great length, is what African countries can now do in the way of reform, what they can do with their own domestic debt market development. This is a situation that is really going to reward the rapid reformers. There is still a lot that can be done to change the course of the medium to long term for many regional economies.
Thank you, Razia. On that reform question, I would like to put this to you, Jacqueline. How are you at the KFE now challenging your government in kind of utilizing this situation and obviously supporting your members?
Well, we've had conversations with government as soon as the pandemic started, and we had a whole host of proposals and ideas on where government could work with business better to support businesses from total collapse. It was very obvious that the SME sector would be a key area of focus and that we needed to have some renegotiation of existing loans to help them tide over this difficult period, and that was done. The banks were very quick in offering that. But of course, the reality is that if you have 2 years to repay, previously you were paying in a year, that's just giving you longer time, but you still have that debt to repay. And the feedback we are getting from businesses is that actually that hasn't helped them as much as they thought. But there were quite a number of incentives, quite a number of initiatives the governments gave, which was basically tax rebates. And this to some extent has helped. Employers specifically were asking for wage subsidies because we do not have social protection cover. And we knew that staff were going to be out of work for a while, would have health needs. If they fell sick, they would need to go to hospital. And if they got injured, they will, all that. So the soft underbelly for Africa, I think, is the weak social protection system that we have, that developed economies were able to utilize at least for a period of time. because the pandemic has dragged on for 6 months. We're continuing to engage government, and we are grateful that some of the incentives that were given have been extended, at least in Kenya and in a number of African economies, for the next 8 months or so. Because if you suddenly decide that the VAT, which you had reduced by 2%, should go back to the regional level, and in some areas, the lowest paid workers were also given a rebate and they don't have to pay tax, that needs to continue so that business, which is trying as much as possible to keep people in jobs, can also recover. We're continuing to engage government because there are a whole raft of taxes that we still think need to be reviewed. The regulatory environment is still fairly tough. And that's a difficult conversation because, as Razia says, most of our governments are fairly heavily borrowed right now. So the debt ratio is very, very high, and that's a real concern here in Kenya. As we see infrastructure projects going up, which are good, the question most ordinary Kenyans are asking is, what about our livelihoods? We have to survive. We don't need posh roads if we can't put food on the table. So this conversation about helping enterprises to recover, because that is where jobs are, it's very important. To look at agriculture, which is the mainstay of the African continent, to look at manufacturing and aiming at manufacturing more locally instead of us exporting as we've always done. I think Africa is rich enough in terms of resources, in terms of the people skills, to be able to manufacture our own products, and we can build on the Continental Free Trade Area Agreement, which aims to have Africa, in terms of goods and services and trade, doing more with herself. That gives a great opportunity to any investor coming on. So these are the conversations we are having. And of course, private capital, utilizing that in areas of providing universal health coverage or social protection. We're talking at reviewing our work injury benefits arrangements. But all this means that business needs a stable environment. That's the main thing that government should be providing. And it's a difficult balance to maintain going on.
Jacqueline, thank you for that. You mentioning road projects, and I believe this was one of the big contracts that was signed in Paris last week when President Kenyatta was visiting President Macron. So that leads us to the investor question. One of the key objectives also for us here in the Norwegian-African Business Association is to try to drive more Nordic investments to the continent. So Natznet, I want to ask you, because as you are following investments flow, which sectors do you think investors from the Nordic region should pay more or extra attention to in this new reality that we will be facing? I mean, there's been a lot of focus on ESG, at least here in Norway now, on the stock exchange and so on. Would that, for example, help more Africa focused? Your thoughts on that, please?
Yes, certainly. When you mention ESG, I immediately think about green energy transition, and you have the second largest economy, South Africa, pushing in that direction as a way of building back, I guess, in a greener facet in terms of the historical issues around Eskom and its solvency. And other countries are following suit and seeking to expand their energy supply through more diversified sources, both to power industry, because as Jacqueline and Razia highlighted, you need it, and you need it at competitive costs. So affordability is the key criteria there, but also to drive accessibility, right? The target for universal access in 2030 was in large part driven by poverty reduction. We can see that as a result of COVID this year alone, there are concerns that the IMF has raised that we've maybe wiped out the past 10 years of progress with regard to poverty reduction in Africa. So the accessibility and expanding that electricity access to the 600 million who are unconnected, or the 870 million that don't have clean cooking fuels, is an imperative. And you're likely to see a focus there, primarily driven by external financiers and facilitated by conducive investment environment. So we keep on coming back to this point, and I'll unpack that in a second. But other sectors that come to mind, we've talked about digitalization, and not just more broadly, but what facilitates that, and the moving of key industries, especially SMEs, so that they have more resilience into e-commerce, and the required infrastructure behind that. And that has actually been increasing in its share in total infrastructure investment in Africa. I think last year it surpassed energy financing towards the energy sector. So ICT is definitely one where we see traction gaining, and COVID has only made that more of an acute need in reality. And on back of that, when you start to see those investments going in, you can see an expansion of postal and courier services, extending in transport and logistics. And you mentioned a road project that's countries trying to create more resilient transport corridors, thinking about how to add an e-dynamic to that so that they're more COVID or healthcare resilient. So you don't have the same glitches that we had at the immediate aftermath of the border closures, of where drivers were actually spreading from one country to another. Well, on the topic of COVID, obviously medical services and healthcare, and while there are some increases in poverty level on the continent, still great appetite for medical and healthcare services, especially meditech. There's some great entrepreneurship happening on the African continent in different areas, such as Ghana in that space. Further on in that theme, it's finance and retail, and thinking about how to both transition that to digitized services, but to expand access. And lastly, I would say manufacturing, and I think everyone harps on this, but this is actually quite critical for economic resilience. As Razia highlighted, we've seen a twin impact on an erosion at export revenues, mainly from commodity prices, and a decline in services. And so it's really that manufacturing that can help build that greater economic resilience to withstand these external shocks. And that's primarily based on leveraging the resource base available. So agri-processing, if you're in Ethiopia or Kenya, they have other assets that they could leverage as well. But for other countries, it's beneficiation of the mining sector, especially those that have core minerals for electrified electronics. And in some cases, looking at the different uses of gas, especially considering it could be a bridging fuel, especially for cooking and other more common demands for energy provision. So that's a bit of an overview. I'm happy to pick it apart over the discussion.
Great insight, Natznet. Jacqueline, I just want to jump back at you, because you meet a lot of foreign investors as well in Kenya, and also through your work with Business Africa, where you're the Secretary General. What kind of advice do you give companies, for example, the Nordic companies, investors listening into this conversation? What would be your advice, companies considering African markets?
Well, we have a lot of Nordic companies already. They are in oil, they are in manufacturing, by and large. I think a lot of the sectors that Natznet is talking about, I would agree with. I would only want to add agriculture, because as I travel across Africa, we are still largely agricultural. There's a huge aspiration of industrialization. Yes, ICT, yes, infrastructure, yes to energy, and we need power in homes. It's unfortunate that 60, 50 years after independence, African women are still fetching water. So we need to look at these areas that would improve people's lives and investing in the rural economies. So we tell the people looking at investing here, who are very welcome, is invest in areas that would improve the livelihoods of the people as well as we do the big projects, because that's very important to stem the rural-urban migration that we increasingly see. And a number of countries have tried to do devolution so that you share the resources nationally and keep people in the rural areas so that we can spark growth there. So for me, the agroeconomy is very important. Agriculture is important. The water sector is important. Of course, education, to give our people the skills that they need. So that will then address the issue of Africa's large unemployed population as we spur economic activity in areas that have been traditionally neglected. Because when Africa got independence, we all rushed to the cities. Now we're trying to go back to the rural areas or stay in the rural areas. Africa's aspiration of trade with itself, I think we need help in looking at these trade policies, trade facilitation, trade-related infrastructure, trade finance, trade information, to help this integration become a reality so that we can trade as one bloc with the rest of the world. And I think those who are beginning to look at Africa not as a continent previously where there's just sickness and disease, look at Africa as a real partner that you can partner with, invest together with for the good of the world. Again, we look at the size of the African market, 1.2 billion people with a combined gross domestic product of almost $4 trillion US. Now, that's a huge potential. So we paint this huge potential to potential investors for them to see the possibilities of investing in Africa's huge resources. I think that is known. What are we as a continent? We have our strengths in our people, in our natural resources, and there's a lot of opportunity to do that. So what I often say is that Africa is a sleeping giant. And this sleeping giant is now awake and is on the rise. This is a time, I think, to invest in Africa, because you have to get it right. When Africa is on the verge of a takeoff, COVID-19 notwithstanding, I think Africa is resilient enough to arise from that. So if you are an investor from Nordic countries, we tell you, wake up and smell the coffee. This is where the action is. We do win-win partnerships, investments that give a good return to the people, contracts that are above board, because the quality of contracts is important, so that we give back to the country and we can both benefit. Having said that, we also point out a lot of work which has been done to address the issue of the ease of doing business in the continent. There are a lot of countries that have improved on their competitive index, and I think this is something we can be proud of and emulate. There is a lot of support that comes from some of our partners, employers organizations in Norway, that help us address the conditions in which business are done and these regulatory matters. So investing in areas that would then build the skills, give back returns to the people and also to the investors in a way that helps Africa gain the independence and the strength that we are all looking for.
Thank you, Jacqueline. Well said. And Razia, I wanted to touch upon what Jacqueline said about the continental free trade area, because what, in your opinion, what can this mean for the continent? You know, it's the world second largest trade agreement in the world.
Thank you, Eivind. And I think this is going to be especially important if we look at some of the drags on global growth that we've seen in the recent past. Even preceding COVID, it was the erection of new trade barriers, the prosperity that everyone shared in with globalization in the early 2000s has really been called into question in the recent past. And just looking at the impact of COVID, what have we seen? The disruption of supply chains. Everyone's saying, well, what's going to be in focus as we try to build back after COVID? Greater resilience, maybe moving away from those just-in-time supply chains. But with it, the very real danger that we see a retreat from globalization and all of the prosperity that might allow for. African countries are hopefully going to be doing it differently. January the 1st, 2021. An important step forward towards the Africa Continental Free Trade Agreement. Now, it is fundamentally significant that this isn't only just something that people talk about. We know that different African countries will be given, as signatories to the agreement, 5 years within which to dismantle existing trade barriers. The majority of the trade barriers tariff barriers that they currently have in place that impede that intra-regional trade. African countries could easily go very slowly on this. With COVID, especially looking to a lot of the people who are involved in the internal logistics and that intra-regional trade having been seen as perhaps spreaders of COVID, this isn't something that's going to be easy to achieve necessarily. But assume that there was a real commitment to make a major difference, the realization that we are in the aftermath of the worst of the COVID crisis, going to be living in a world of subdued demand, concerns about investment, concerns about how we reignite global growth. If different African governments really come at this from the front foot and say, we need something that is going to supercharge the reform effort, and it's something that's been spoken about for a long time, Africa, as a region, does less trade with itself than any other developing region globally, provided that Africa Continental Free Trade Agreement is given some sort of actual impetus where we see meaningful dismantling of existing trade barriers. And there's still a question mark around that. Let's be honest, 5 years is a long time. There's lots of time to go super slowly on this. But if this were to accelerate, it would come at an all-important time for African economies that will be in need of every boost to demand that they could see. So the manufacturing that Natznet spoke about, the need to foster a better business environment that Jacqueline has spoken about, Well, proper commitment to this dismantling of existing tariff barriers could go a long way towards making that a reality.
Very well said, Razia. I also wanted to ask you, Razia, about the two major economies on the continent, South Africa and Nigeria, combined having close to 50% of the GDP. They have both countries have been dragging the growth in the wrong direction the last years. What is your projections, or the outlook? Is it
That's a very important point. As an African economist, I almost got tired of having to explain in recent years, the growth rate in Africa has decelerated. But you know what? It's really a question of the regional giants. It's because South Africa and Nigeria, which between them make up about 50% of sub-Saharan African GDP, they just haven't been growing that strongly. Now, we had a very interesting discussion in terms of which countries are embracing reform at a faster pace. Because of the onset of the COVID crisis, we know that we saw a very sharp decline in South African growth. It is perhaps wrong to think of growth in annualized terms, but quarter on quarter, at the worst, one of the most severe lockdowns that we've seen of developing countries anywhere, South Africa had a 51% annualized quarter on quarter contraction. Maybe pay little attention to the number, because Q3, as activity starts again, will look equally good in the other direction. Maybe the numbers are pretty meaningless. But the important thing is what is being done to really get over this shock. What is being done to lay the foundations for more sustained growth going forward? Many investors looking at South Africa would have expressed a certain amount of disappointment. Late 2017, early 2018, with political change in South Africa, there was every expectation that we were going to see accelerated reform. And it didn't really happen. In the last few weeks, however, there seems to be new momentum. There's certainly new momentum in terms of dealing with some of the governance issues, the fact that there had been very little in the way of arrests for actual state capture, some of the important things that had started to go wrong in South Africa, that has turned around. In terms of the much spoken about spectrum license, that is turning around. Finally, there seems to be momentum. In the all-important energy sector, and Natznet already referred to this, the embrace of greener technologies, finally a new renewables bid round. It looks as though South Africa is moving forward. Now, the future is still going to be difficult. Let's not kid ourselves about that. When an economy suffers the kind of shock South Africa has seen, with a fiscal deficit that's likely to come out at around 16% of GDP and could drive debt ratios a lot higher. There are still lots of problems with the state-owned electricity company. Nonetheless, the fact that we're finally seeing an acceleration of these reforms is important. Just a few quick words on Nigeria. For many of us, we'll be thinking of Nigeria, an oil-producing country hit hard by the dual shock, oil prices as well as COVID. We saw a 6% contraction, oil and non-oil, in the second quarter. And the concern is, well, Nigeria, there are problems with foreign exchange liquidity. It's taken a big external shock. How do you reignite growth in an economy that has really struggled to see positive per capita income growth since late 2014, early 2015? Well, Nigeria also is embracing reform. We have seen a move to say very clearly, this is the end of fuel subsidies. We can't afford to continue down this route in the future. Power sector tariff reforms, important things, as well as a focus on revenue mobilization from the wider economy. Nigeria has to take small steps initially, but we think that this is broadly heading in the right direction. So still a lot to do, but the key theme that I would like to touch on is that in Africa's biggest economies, we are seeing reform momentum, and this is good news for the whole region.
Indeed, good news, Razia. Thank you. And talking about topics, Natznet, if we're looking ahead, what do you think will be the major topics we will be discussing in 2021?
With regard to
the Continental Free Trade Area would be one such thing, but are there other things that you think will kind of predominate the conversations we will be having in the next year.
Yes, I think in terms of the opportunities for an accelerated COVID recovery, the AFCFTA is certainly at the top of the list, and how that might facilitate further growth in regional value chains. And I think the Africa Medical Supplies Platform, that initiative set a very strong precedent of what you could achieve if you come together collectively and cooperate, and it's still operational. So it's also showing you when you use new technology to facilitate, and there was a short turnaround time, and it was in partnership with the notable private sector actors across the continent, you can see what can happen. And so much to Razia's point just now, when you were speaking about Nigeria and South Africa, and to a certain extent Angola, the next one on the list, those countries had the reforms almost poised and ready to go, but political differences stalled it. And the leaders saw the moment that the crisis provided to seize it and to push them through, to finally use that momentum and push that through. So keen to see more of that going forward, and not to be disrupted with upcoming election cycles like municipal elections in South Africa next year, or the ruling party elections in Angola next year. That leads me to my second point. There will be a focus on potential leadership changes. And it's more acutely looking at Ethiopia, in a sense that it's been delayed. It's a country that has had a lot of unrest. Over the past 2 years, you have a not so new government anymore, trying to get a handle on it, but it seems as if different regions are continuing to challenge its authority. So, the great hope of Ethiopia is the rapid growth that it had, and everyone's keen to see it continue, but how the government is able to placate those regionalized concerns and move forward as a more cohesive unit. So that's definitely going to be on the calendar for 2021. Other elections that we're likely to see, Zambia, which has just gone and had a default, raising concerns about other African countries with a high proportion of private credit debt, and whether or not it's going to have a knock-on effect. On the last side, in terms of something that Jacqueline mentioned, a lot of the forbearance and supportive measures extended to African SMEs were 3 to 6 months, some countries up to 24 months, but a large majority of them are going to expire towards the end of this year, early next year. So the real impact of COVID and the business disruption related to it will start to be seen in whether or not companies are going to go into administration in the early part of next year. So that's going to be a critical area, or a critical point of juncture for government support in the form of reforms or in other mechanisms to ensure that you still have that resiliency, because those are the actors who are going to really lean into and build the momentum of the regional value chains. They're going to ensure that employment levels can return to more robust levels. The multitude of benefits that will be derived from that is important. So that's the last factor that I would highlight for 2021.
Great, Natznet, thank you. Jacqueline, you mentioned this, the challenges that the pandemic has brought with it, that all the jobs that have been lost in this process. And in a previous session, we had focus on where will the jobs come from, the new jobs that need to be created. How are you advising the Kenyan government on job creation? What are your reflections on that, if I may ask?
If you look at the continent and where jobs have been coming from in the last few years, the reality is most of those jobs are in the informal sector. Over 80%, over 90% in some economies, Kenya included. We've moved from 80% to 92%. So clearly this is where the jobs are. The formal sector is actually shrinking in a way, but it's the one that has what we call decent jobs, well-paid jobs in the regulated sector. But most of Africa is in the informal sector, a little in the SME sector. So we've got to look at this sector. We've got to look at agriculture as an area where most of the jobs will come from. So the issue of enterprise recovery and sustainability becomes very important in terms of jobs creation. The issue of regulation and supporting the informal economy to do good business, profitable business, and be able to recognize the skills in that economy. A lot of Africa is talking about skills recognition, recognition of prior learning, so that these can be replicated, then also becomes very important, because we can't ignore the fact that this is where real life is. This is where the traditional indigenous businesses are. We've got to talk about that if you're looking at jobs. Again, I said over 60% of our economies are agricultural, very many of them. So how we do agriculture, how we make agriculture attractive to youth. We have a lot of programs where that is happening so that they can do something with their hands, also becomes a source of livelihoods. The technical and vocational area, which has been traditionally ignored, as many Africans converted every educational center they had into a university. We've realized that that was wrong, and we really need these middle-level skills to help also support the economy. A lot of jobs will come from that, and many countries have realized that that's an important area to invest in. So as we discuss the new normal and move almost out of force into this new technological world, we've got to discuss this new normal, considering actually the reality of where Africa is. So we're like in two paradigm shifts. And as we talk to government, we say that these are issues that are interrelated: the issue of skills, the issue of informality, the issue of agriculture, and yes, the new sectors that are emerging that we also have to develop to be able to industrialize, then become very important. So we've been saying that what we want to build is a better world, to build back better, so that we remove the inequalities and allow, especially young people, opportunities to be able to join the world of work and realize their potential. COVID-19 did one thing for us, I think, as the world. It stopped everyone in their tracks and gave all of us an opportunity to rethink how we've done business together and be able to work better together as humanity and bring back the human spirit in the work that we do in terms of development, in terms of leadership.
Thank you so much, Jacqueline. And Razia, I want to just pick up what Jacqueline was saying about agribusiness and the potential, or let's say the untapped potential. Has there been made any kind of calculations on what African economists stand to earn if you manage to get more of the value chain and basically...
What we do know is that more Africans are involved in agriculture than any other sector. So if we're looking at any comprehensive poverty alleviation effort, if we're looking at anything that is going to be leading to the building blocks for sustained growth, sustained income growth over time, it is absolutely agriculture that needs that policy attention. Now, that hasn't always been the case everywhere. We can think of a number of countries which are known for doing other things. Africa has been somewhat ignored. Was it the Maputo Declaration from way back, where African governments pledged 10% of their budgets were going to be focused on agriculture? That certainly hasn't been the case. But any intervention in that sector would have more of an impact on the poverty alleviation agenda than almost any other intervention that we could think of.
Good. Thank you, Razia. I see that we are reaching the close of the session, but I just want to take one last round. And if there's a message, Natznet, we can start with you. I mean, if there's a message that you would like to send to our audience here today, perhaps leaving on a positive note, what would be your final message?
I suppose with COVID, it's easy to get overwhelmed with the uncertainty that we're now navigating individually, collectively. But in many ways, when we look at the African continent and the countries, the issues that we've just touched on are not entirely new. They were there. COVID has just aggravated them to a certain extent. So it's important to focus on the fundamentals, the opportunities that we've highlighted, the prospects brought in by the AFCFTA, and see how we can stimulate inclusive recovery, inclusive growth, for the African continent, because that in the end is going to be the best risk mitigation factor, and ensure that you secure your return on investment, whether it's key bilateral partners, Nordic countries and companies, or multilaterals. It's more an acute focus on greater well-being, more inclusion, sustainability, but economic sustainability and resilience within that. So any projects that are directed in that direction are likely to fare well.
Great message, Natznet. Razia, what would be your last message to the audience?
It's that Africa has actually surprised positively. Now, let's not downplay the impact of the very real economic crisis. Let's think of what the lack of schooling because of the COVID containment measures has done. There's been an education impact. The concern is there's been an immunization impact. There may have been some backsliding after years of very positive development and overall development gains. But the one positive aspect is that the health crisis has not been anywhere near as bad as people had feared. And at least one of the reasons for that was the very proactive stance of different governments in the region, learning from what had been done, in some cases well, in some cases not so well, elsewhere in the world, and applying the more positive learning points to their own economies. Let's not forget, as we look to how to navigate the period ahead, that this is yet another example of Africa perhaps proving some of the cynics wrong. And hopefully, in the years ahead, with a restoration of a growth path, and a lot needs to be done to secure that still, we should take that seriously. Hopefully, Africa will surprise positively in an economic sense as well.
Thank you. That's great, Razia. Jacqueline, final message to our audience, please.
I think the pandemic has taught us that Africa was on the right track and still is on the right track as we started talking about building more, doing more with ourselves, and looking at our development partners as partners rather than charity. That is a spirit that Africa has brought back. The pandemic has also shown that globalization will succeed only if regional supply and production chains are strong. So we need to build this within the continent. The production of global products and services needs to be spread across regions, and certainly within Africa, we need to develop that fabric to be able to do more for ourselves. So it is time to focus, I think, on improving these supply chains in Africa, given all these initiatives that we've talked about, the Continental Free Trade Area, the growth and the recovery that Razia is talking about, the various sectors that we have that have potential for growth has set us up for success going forward. And I think the future for Africa is bright.
Thank you so much, Jacqueline, for ending on such a high note. And again, Natznet, Razia, Jacqueline, thank you so much for sharing your insights. I think this has been a great conversation to end off this Nordic African Business webcast. But I want to say before we close that you are obviously invited to Oslo on the 30th of September next year, when we can have our Nordic African Business Summit in person. There will now, after this session, be an opportunity to do some more networking in some virtual cafes, networking rooms that will be set up from the lobby. And again, I would like to also say thank you to our co-host, the Norwegian Ministry of Foreign Affairs, Scatec Solar, and the Africa Finance Corporation, who has made this possible, as well as our partners, Norec, Ebcam, Nurmara, and the Financial Times. So to everyone, to all the guests who have been following this session today, I think we have had 17, 18 hours of sessions. Thank you to the team who has been running around here in Oslo, helping people with connections. And again, to our fantastic 50 speakers in total for being part of this. So here from Oslo, a big thank you again for being with us. And have a great afternoon. And
thank you. Bye.
Thank you.